Student loan payments set to resume here in 2023. How is that going to affect the economy? That's what people are talking about. I'm going to talk to you about how that is going to affect ability to purchase a home specifically. So stay tuned. I'm going to talk about it. I'm going to give you some real numbers to look at it, how it's going to affect your purchasing power. Stay tuned. All right, Matt the Mortgage Guy, residential mortgage broker, licensed across the country. If you want to connect me and my team, go to greatmortgagebroker.com. Fill out the quick form. We're happy to help. So in today's video, I just want to go over exactly how does student loan payments affect someone's ability to buy a home. It's important, right? And with student loan payments set to resume, October 1st, 2023, I think payments are due, which means interest is going to start accruing again on September 1st, 2023. The average student loan payment is between $200 and $299 per month. I know some people $800, $1,200 a month. Others, maybe it's less, right? But on average, $200 to $300 a month is what people are going to have to resume paying on their student loan payments. And for some, especially those who have been thinking about buying real estate, how is it going to affect your ability to purchase real estate? Well, any payments for that matter, and in this case, we're talking about student loan payments, are going to affect your debt to income ratio. I'll share with you a specific example, and I'll give you some real numbers to work with. That's going to probably be the biggest thing that it affects, right? And so I'll go with those numbers next. But quickly, I want to touch on, student loans may affect your credit score, right? And those outstanding balances may affect your credit score, which in turn is going to affect the terms you get on your mortgage. And, if you're going to get 0.25% higher in an interest rate, that certainly affects affordability, how much you can apply for and things like that, right? Another thing to touch on is that if you've got another $300 per month payment going out of your bank account, it may affect your ability to save up for a down payment. So while you might have been eyeing saving up enough to put 5% down by, the summer 2024, that plan might take longer if you've got an extra $300 a month in outflow to student loan payments. So let's go back to debt to income ratio. This is the biggest factor it's going to have on potential home buyers. And I'll give an example. I like concrete, specific examples with numbers involved. I think it helps nail down the concept, helps you understand better. Let's say that you make $8,000 per month, and $8,000 per month is your income. Lenders, generally speaking, are going to want your total debts, including the mortgage payment, to be at or less than 45% of that income. So if we take 8,000, we multiply it by 45%, the number we get is 3,600. We need all your debt payments to be $3,600 or less. And, I will just for this example say that there is no other debt payments, right? And so we're just trying to get to a $3,600 a month mortgage payment. Well, if you've got a $500,000 loan with about 10% down, you're at that $3,600 max, right? Now we have to factor in the fact that you've got a $300 student loan payment. How is that going to affect what you can purchase? Well, for me, it's easy. I just need to lower the price until I can get to a $3,300 mortgage payment, knowing that when I add the $300 student loan payment, now I'm at $3,600 total. And I'll tell you what that does. It has us lower the purchase all the way down to $450,000. So in this case, adding a $300 per month debt to that debt to income ratio loses us $50,000 in purchasing power. As most people who are in the real estate market, getting themselves pre-approved, going to greatmortgagebroker.com, looking at real estate, they know it's tough enough as it is. And in the area you live in, it might be that it's really hard to get something for $500,000 or less. So if you add in a $300 payment, now all of a sudden you might be out of the game, right? It's not going to be everybody. It's certainly not going to be the majority, but there will be some where this student loan payment might put them out of the game. So that's the short and easy on how it's going to affect you. Obviously, these numbers are estimates. These numbers are just given to give you some context around how student loan payments may affect your ability to get a mortgage. So if you've got a higher student loan payment, it could have an even bigger effect. Another thing to consider is that debt to income ratio and what the lender qualifies you for is one thing. What you're comfortable with and what your personal budget is really the more important thing. And for a lot of you, if you've got a $2,500 a month rent payment and you haven't been paying any student loans at all, and there's barely enough money left over at the end of the month, or there's month left over at the end of the money for a lot of you, um, adding hundreds of dollars in student loan payments to an already tight budget tells you I can't go out there and get into a $3,000 a month mortgage, even if I thought I wanted to, right? So personal budget wise, that's something to think about as well. So hopefully this was helpful. Any questions at all, feel free to reach out to me and my team, greatmortgagebroker.com. We're licensed in 48 states. We're happy to help. If you want to connect with an agent anywhere in the US, you can go to homeandmoney.com/Matt. Great vetted agents who are going to give you great service. These are agents that are still in the business, right? A lot of agents have hung up their license and moved on to greener pastures, at least pastures where they can eat. So enough about that. Greatmortgagebroker.com. Connect me and my team. We're happy to help. Talk to you soon. Bye-bye.